Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Tuesday, the 27th of May, 2025, just after 6:10 p.m. Central Time. What a crazy market. If you think of the last 3 business days, it's insane. We had a market where President Trump came out, hurts the market by going 50% tariff on European Union, 25% tariff on Apple, then 25% tariff on all other phone manufacturers, that's foreign ones, that manufacture and sell in the United States. Then he lowers the tariffs on the EU after he gets a call from the EU commissioner, and that sets the market up on a rally. And today you come in after moderate trading, over the weekend when you get the Memorial Day trade, and the markets catch on fire today. So we're going to talk about that as to what happened in the stock market and the financial market wrap-up. In the gold market, prices got thrown back. It's really that simple, to the 3,300 level. The game hasn't changed in gold. The game is still an inflation game. Do I think the market's going to run away here? No. We thought the 3,500 level, if you'll recall, would be a key resistance, and I did a special report on it showing you the 4th price count, and that all tied in. And I did that, got to be 5 weeks ago or more. So I feel good that the market did what we thought. When you look at the rest of the markets, copper market is in the 470s. It's not a $5 market right now, but if China can do something powerful and get its economy going again, that would be something big. What I can tell you is happening to support the market is in this window where the U.S. has taken tariffs way down on China so that the U.S. and China can try to figure out how do they make some type of deal that makes sense between the two of them. The manufacturers there are making goods like there's no tomorrow, putting them as fast as they can on ships to get them sent to the U.S. before the two countries decide, can they deal together? Can they make a deal? The tariff's going to go back up. Where are they? Right now, you hear nothing about it, right? Think about what I'm saying. Very little about it. It's an interesting time. What you're hearing about is the possible deals that we might get with India, possibly Japan, South Korea. There's a number of deals there that might happen. Not one word on Mexico, and certainly nothing on Canada at this point. And we'll see on July 9th what's going to happen between the U.S. and the European Union. All right. When we take a look at data for tomorrow, you're going to get the Mortgage Bankers Association at 6. Red Book Group will come out with their weekly retail sales at 7:55, a day later than normal for the holiday. The Richmond Fed will update their monthly manufacturing sector numbers at 9 o'clock. The API numbers will come out at 3:30. After the market closes, and this will affect everything, is the big boy. NVIDIA earnings are going to come out. And then at 5 in the afternoon, Central Time again, I believe that Kramer is going to interview Jensen Huang. So we'll find out what's going on there and what he's saying. U.S. consumer credit today. Let me give you an idea of this roller coaster ride the president's putting you on. It shot up the most in 4 years after making a close low, very near a 5-year low earlier this year. So it's all over the board, but consumer expectation shot up by the most since 2011. That was just a given when you saw that the stock market would probably rally. And the cutoff on the survey was May 19th, but half of those who responded were by May 12th. And the reason I mentioned that is all of today is not that. Today is about the president lowering the tariffs, but people already were feeling that this president is a point where you're getting to fade it. Now, let me explain that in the marketplace. What you can fool the market so many times, but if you get my newsletter, I wrote today and showed the different tariffs for this year that have come out and how fast President Trump has rescinded those tariffs. So the market is getting wise. The president comes out, spooks you, but now you're going to see the buyers show up on those deep breaks. They'll do that until one time it doesn't work, then they'll back off that strategy. But it's fast how fast, and amazingly how fast they adapt to things. What I said on the gold doesn't change. you're going to have a 10% tariff during the president's full term, in my opinion. Could come off under whoever's the next president, but I don't see how we can possibly back off on it. His tax bill counts on this money to not the large part, but it's an important part. And I think that's going to be very important. And he don't dare get his tax bill, whatever that is, if he likes it, and then pull the plug on that 10% tariff and undermine his own bill. That's my thinking on that. So when I look at the gold market, what do we have? Well, on a weekly chart, as long as you're up and over the 18-week moving average of closes, I have an automatic bullish bias. I see a sideways market. I see a market that peaked out here at the 3,500 level, recently got down near 3,100, and seems to be making a home in that 3,300 zone. When I put the swing line on, you can see you've got a pattern of higher lows and higher highs. That's the definition of an uptrend. When you put on where the market's fighting its battle, do you disagree with me that the market 1, 2, 3, 4, 5, 6 days is literally out of those 6 days, I think 4 of them actually hit this 18-day average, got within a fraction of it. You're right in that zone. That's what this market's playing against, and that's the support the market has at the moment. Where's the resistance? You haven't hit it. The upper Bollinger Band is there. On the big break, you can see the market spent 48 hours hitting this market point, and then it shot back up to the upside. And since then, a week has gone by where the market has now stayed over that average. In terms of momentum, still pointing up, and it is not overbought, so uptrend. When we look at the gold-silver ratio, as long as the market stays underneath this 18-day average of closes, the lower it goes, it means silver on a relative basis is acting stronger than gold. That's because you need fewer ounces of silver to get 1 ounce of gold. When you look at the silver chart, you got up to the Bollinger Band, and if you've taken, and a lot of you did buy our courses and so on, if you take that course, it's exactly what I teach. You weren't embedded, you're overbought, you get to the upper band, and markets, they find that to be a magical resistance number because so many different traders pay attention to it and a lot of algorithms. Where's the big support? It's right here. The combination of the 18-day average at 3288.5 to, let's call it the 3291.5 area, the 18-day average of closes, but you have a very overbought market. Until that market works off the overbought status, I don't know that the trade's going to step in and do anything. In the copper market, last week you got up to the, upper Bollinger Band. You opened today, played with that, and came right off down. Again, you only stay over or under a Bollinger Band 5% of the time. And in the platinum, you had 4 days in a row where you closed over the band. You heard me say over and over, it's rare you get 5. But you have an embedded reading, and until this red line closes under 79, the breaks in the market will likely be bought by the pros, seeing if they can drive the market up to the Bollinger Band. And if it closes under it, I think they'll bail. Last, the dollar went down, challenged the zone. If you take a look, the low was 98.68. The Bollinger Band is 98.70.5. And look what you go to. You go right to that number. I'm laughing because it so often happens that the market stops at the bands either way. This is really a sideways market. It has a downtrend, no question, but it's oversold, and I don't think you're getting new money selling into an oversold condition. This and a lot more is to be had in the free offerings that we offer our clients. If you go to our website at iraepstein.com and look on the left, you'll see the free offers that we have there. In those offers, different free courses, ideas on how to work. I just mentioned price counts, free price counts, so you can try that out. That's available to our clients. That is not available other than giving you a sample so you can see what it's like. Then Modern Trader, the ideas there, the free pivot points. Did you ever use those for day trading? Fascinating. And then the time price indicator called a rune indicator. Very, very fascinating. Then Linn research, my twice daily research. You can sign up for what you want, seasonality, it's all there. You just choose one of these blue areas, give it a click, it'll go into a basket for you. At the bottom of the page, you fill in, just like you're seeing here, your name, your number, and we'll get everything emailed out to you. It's really that simple. So go to iraepstein.com, look at the free offers, take advantage of it. I'm Ira. You have yourself a great day.